Basic terms in trade. Before you begin trading on the stock exchange, it is necessary to learn the basic terms and the concept used in trading. These concepts include a currency pair, chart or graph, time frame or time zone, pips measuring unit on the stock market, leverage or financial levers, spread or brokerage commissions, lot size of stake, long buying position, short selling position, stop loss, loss option limits, take profit limit gain option, bid price, and ask price. We will now explain each of these concepts a little more detailed. Currency pair. The pair is a financial derivative that consists of two national currencies. The first currency in the pair is called the base currency, while the second is called quote currency. Trading with one currency pair still implies two transactions, which means when you buy the base currency in the pair, that automatically means that you sell quote currency or other currency in the pair. Buying or selling a currency pair is always related to the base currency. What does that exactly mean? If we say that we bought the currency pair euro US dollar, it means that we bought euros and at the same time sold dollars. And if we say that we have sold the currency pair euro US dollar, it means that we sold euro and at the same time bought dollar. Charts. Charts or graph represents the desktop where is presented the movement of a certain currency pair or any another financial instrument. There are several different charts on the stock exchange. These are line charts, bar charts, and candlestick charts known as Japanese candles. Now we can move on trading platform to show these three types of charts and point out differences. Line graphs represent the price movement shown by one line. Any closing price or opening price within, for example, 1 hour or 1 day is one fixed point. When these points join at the one line, that line represents the price movement of a currency pair. Line graphs are rarely used because they could not show movement within a specific period of time. For example, if we look at the daily charts, the price movement within a day is shown with only one point. The following forms of charts are bar charts or column charts. A bar chart is slightly more used than line charts because they show the highest and lowest value within an interval. The opening price is represented by a drawable line on the left side of the diagram, and the closing price is represented by a drawable line on the right side of the diagram. Also, this chart, as the previous one, is not so popular among the market participants. The most used charts in the market are Japanese candle. Similar as the bar charts, Japanese candles show the highest and the lowest price as well as the opening and closing price for a specific period of time. The difference compared to the previous chart is the body of the candle, which is rectangular shaped and represents space between the opening price and the closing price. The body of the candles is painted in different colors depending on the direction of prices. Now let's get back to our slide. The first candle is green, which means growth of the value within the time interval, which can stand for 1 minute, 1 hour, 1 day, or other. The body of the candle is formed of a rectangle and two vertical bars, one below and one above the rectangle. Top upper dashes indicates the highest price observed during this interval. The bottom dash indicates the lowest price of a currency pair during this time interval. The bottom line of the rectangle represents the opening price, while the top line of the rectangle represents the closing price of the observed currency pair in that time interval. Another candle is red, which indicates a fall of the value of that currency pair. As previous candles, dashes represents the highest and lowest value of the movement of a currency pair in that time interval, while now the top line of the rectangle represents opening price of the currency pair and the bottom line of the rectangle represents closing price of a currency pair in that time interval. We can go back to the platform in order to see the Japanese candles on graphs. On our graphs, candles are framed in green, while the bodies of the candles whose interval represents growth are gauzy, and bodies of the candles whose interval record fall are white. Depending on intensity of price movement during a time interval, candles have different size and shapes. If you notice that candle's body consists of a single line, or if the candle is reminiscent of cross, it means that the closing price and the opening price are the same for that time interval. However, if you notice that dashes above or below the candle's body not exist, it means that the opening price and closing price is the highest or lowest value for that time interval.